After 2 weeks of holiday, I'm finally back. And for those who remember that just before leaving, I told you, given the right circumstances, the stock market may move very well. And you might see Nasdaq above 13,000, even 14,000 points. As we speak, Nasdaq is above 13,000 points. The question is, what will happen this week? That's one of the things I'll try to answer. You are listening to the StockInvest.us podcast for week 33. And what about the trading tips? When I left you last time, I did not invest into any more. But what about the open position in Tesla and Zomedica? I told you I had such a great strong belief that Zomedica would pass at least 30 cents. Right now as we speak, it's 37 cents, up more than 60% since I bought it. Will I continue to keep these stocks? What are the new stocks that I will look into for this week? Well, you will know. You just have to stay tuned. If you're a new listener, here is what we'll do. I will quickly run through the market, tell you a little bit about what I expect for this week, a little bit for a long week, look at the chart, come to a conclusion, then we will run to a few quick analyses of some big stocks, even crypto. And at the very end, I will try to give you a few possible trading tips. But first, as always, and as usual, you have to listen to the disclaimer and then I will be back.
Hello everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
After making podcast every single Monday for more than 2 years straight, it was very good with a short break. And I'm very happy to see upon my return that the market's done very well. Of course, I had a little look now and then, but in general I made vacation as it should be. But Nasdaq had an amazing run, up more than 13% so far. And that means that several stocks did even better. And I mentioned to you when Zomedica was 22 cents, this little penny stock might do very well. And as we speak, it's almost 40 cents, leaving me a hefty profit. We will get back to Zomedica and other stocks by the end of the podcast. But first, let's have a quick look what I said last time. You know, is for the market to follow the middle of the trend and then bounce up, because then we can have a trend break. In this case, it means that Nasdaq reverting back to some 11,400 will just be natural, but if it goes up again, it will have a very fair chance to break the trend, and we can easily go back to 13,000 points, even 14,000, because then things will just get into a strong positive mood and market will try to regain some of the huge losses. Those remember that Nasdaq was up at 16,000 points, hit the roof just as it should, and fell all the way back. In the chart, we can see also two other things. We can see there is a golden star and also a buy star from the relation between the short and the long-term moving average. Usually golden star turns out to be an amazing signal. It was developed by me in 2007 and it's a stronger version of the golden cross. I'm very happy to see that the golden star which I invented is working very well, and that the signal was more correct than I was, because I concluded last week with a fair chance of a correction. I told you it would be either a huge upturn or a downturn. Luckily, it became an upturn. But there is a new week, and what is the new week ahead of us? What can we expect? I'll try to answer that as good as I can, as I always try. And I will do it two ways. We'll look at what are the fundamental things that might happen this week or have an effect on the market this week. They will happen, but might have an effect. We will have a quick look at some technical indicators, and at the very end we'll have a look at the chart before we move on to the two other sections of the podcast. And what are the fundamental things for the week? Well, there will be more Q results, but none of them are really heavyweighters. The most heavy is maybe Walmart and Home Depot tomorrow, because these two stocks will give an idea on consumer spendings and of course inflation. Today there will be Tencent Music. I like Tencent Music. I think it is an attractive stock at current levels, and I advise you to maybe check it out. Cisco will be on Wednesday, and maybe the biggest news for the week will be the job numbers on Thursday. As I told you, I think that we will see weakening in the job numbers, but the July numbers came in better, being a part, of lifting the market as good as it has done for the last few weeks. But I think that we will see a decline in job numbers. Recession is inevitable. It will happen no matter what they say, in my opinion. You might just delay it. And oil is $88, down $6 since last time, my last podcast. And actually a low oil price is good for stock markets, but it's indeed not very low. 88 is still very high. I think it's just temporary. I told you this before. We have a temporary fall in the oil price, but I think it will ramp up, and I think it might happen shortly. Last time I told you that Chevron and other oil stocks were a good option, and if you look at Borr Drilling, you look at Chevron and other companies, you will see they have done very well. I gave you the reasoning why. They make such huge amount of money that they will pay out very huge dividend, and this will just continue. So they will handle a downturn in oil very well. Could fall much more, and still these stocks should, in theory, hold very well. And for those who followed me for such a long time know that when oil was 20, I told you just buy for whatever you have, because this will be an amazing journey, and it has been an amazing journey. I don't think it's over yet. Gold is another thing that I like to mention, simply because gold reflects a little bit how money moves. And I told you gold would have a short downturn, but I think that it will turn up again soon, and that I have a target for 2,500 for gold. While I've been away, gold is up $73, is currently trading just below $1,800 per ounce. I think that we'll just see gold continue upwards. There is a major reason for that, and it's of course the Ukraine war and now the Taiwan conflict. And again, we have to rewind, because for those following me a very long time know that long before the Ukraine conflict started, I told you there will be major conflicts. In my opinion, Ukraine will be the first, and then there will be Taiwan. I'm very, very sad to see that Taiwan now is getting higher up on the chart. The probability for war or conflict in China is more probable than not probable. How can you use this information? Well, if we look at the long-term picture, with a high probability of a new conflict being Taiwan. Personally, I am not increasing my exposure in the market. When markets were very, very high more than a year ago, you heard me say that now I will reduce my exposure, and I did. I was not able to time the top exactly, but I was very close. And as markets been falling, Nasdaq was 16,000 points and fell all the way to 10,000. My exposure got less and less, but before 10,000, I started to increase the exposure because I thought markets again were good. I was planning to continue to increase my exposure, maybe not to 100%, but for sure get much more into the market. But with Taiwan now coming up as hard as it does, I will not increase my exposure. Because if these things break out, it will affect the market, I guarantee you that. I don't think it's a question if, it's a question when, and when is suddenly much shorter than I originally thought. I thought it would be somewhere in 2023, the Taiwan conflict. Well, now it looks like it might even happen this year. Hopefully this is not. But this is an argument how I try to position myself using fundamental big pictures. I hate talking about politics because politics is very dividing, but you have to try to understand the bigger picture to better time your buy, where to buy. If I'm correct, I told you, in my opinion, there will be a huge energy crisis in the winter. Russia reduced the gas exposure to Europe, and while we celebrate any sort of progress for the Ukrainian army, and any sanction that we can impose, we forget that we are dependent on Russia. And this dependency, we cannot move away very quickly from it. It is there until we have replacements. And we are not able to put these replacements in place before the winter. And if you follow news, like I do, I like all kind of news, you can already see that Germany has infected rules for energy. Spain does the same thing. There are things like you cannot have it colder than 28 degrees. On air condition in winter you cannot have it warmer than 19 degrees. They are all preparing for winter because it may, in all likelihood, be very hard on energy. And you might think, well, this Ukraine conflict may end soon and we will get back to normal deliveries of gas from Russia and everything will be just fine. What has happened behind the scene is, of course, that Russia is connecting with everyone else. They are connecting with China, with India, and energy flow in different direction. These things may be irreplaceable, meaning that they will stay even after the Ukraine conflict ends. And that means that we will be more dependent on energy, and we cannot put up solar system fast enough, we cannot put up windmills fast enough, we cannot reduce our own consumption of energy fast enough, which means there will be a sort of energy crisis, and that means oil price will be pushed higher because oil is energy. It can be burned for heating and petrol and all these things. So what I'm trying to say is that if you look at these two things together, there is a high likelihood that energy will be very expensive in the future. So where do you want to put your money? Where will you put your stock trading? Maybe perhaps you will look at energy stocks. It's just one of these tips. And I use these things. I try to see the big lines. I try to position myself. I know that electric vehicles are here to stay. It's just finding that sweet spot, and you just invest a little bit more now. You have them at an affordable level. Remember, Tesla was down at 500, NIO was down at $12-14 or something. It's even better than just a year ago when all of them. But these are here to stay. Which one will survive? I doesn't say all of them will survive. But if you believe, like I do, that green technology is here to stay, so of course you like to have a portion in green technology. And beyond above everything is, of course, the war industry. Because with the aggressive politicians in the world aiming for total chaos, seems to me like they are aiming for total chaos, everyone is arming up, and that means that the weapon industry are selling and selling and selling, and they most likely will continue to do this as things ramp up even harder. So that's also a place where you like to be. Lockheed Martin, any of these companies that are huge benefiters of war production, supposedly to be good. And if we get a correction down in the markets, well, these stocks may hold much better. These are the bigger pictures. I will not talk more in this podcast about these things because I mentioned them many times before. Ukraine conflict, upcoming Taiwan conflict, the energy crisis, and I see more things waiting for us. We will have to do the very best. The aim of this podcast is one simple thing. It is helping you to reduce your losses and increase your gains. So by giving you this information, I hope that you start to look more into news, start to understand more the bigger picture, and that you don't do very random stock trades. Don't just jump on whatever meme is or whatever said on Reddit, that you have a strategy for your buying. Follow the fundamental news. They will give an idea what is moving, like big trends. And the other thing is technical analysis, which I love. And you saw for yourself, the golden star works very well. It's just a technical indicator, nothing more. Other things I like to look out for is, of course, the buy and sell signals. And at StockInvest.us, we analyze more than 38,000 tickers. 26,000 of these are qualified for signal analysis. Right now, as we speak, 44% of all the stocks that we analyze are giving a buy signal. This is extremely high. I haven't seen this high since Nasdaq was at 16,000. I told you now it will be red and it will be very bad. We are at the same level. If we go to Nasdaq, it's 47% buy signals. New York Stock Exchange, 53% buy signals. These are insane high. And whenever there was as high as this, there has been extremely red days before. At the same time, I have to warn you, when things are overbought, the relative strength index is one of these indicators that you can use to measure this. Mockad or whatever signal you like. When things are overbought, they can go even faster, meaning that you can have these super rallies because things is way too optimistic. It's overheated, and in overheated things can just go totally bananas. So here is the trick. Should you stay? Should you not stay? I for sure recommend you to use stop loss. The other thing that I recommend you to do is try not to overexposure, because everything technically now tells that the market will have a short-term reaction down. The very good thing is that Nasdaq went up from 10,000 to 13,000, meaning that it now will have several support levels below. The reaction, if it comes, and I believe it will, come this week, will be total natural. The question is, will it turn at 12,000, will it turn at 11,000, and will we establish an upward trend? If we look further on our list, we can see that London 30% buy signals, and Tokyo 47%, and China 50% buy signals. Very high. Not sustainable in my world. And again, how do I play this game? Well, I do not overexposure in such a market. I just play it. I let them run as long as they run, and cut them by the stop loss. When markets get overbought, usually the volatility increases, so you have to put a little room in your stop loss, especially if it's very volatile stocks that you play, because they can fall 5% or even 10% on a day, just to go up 25% over the next few hours. Seen this a million times. You cannot use just standard 5%. You have to be a little individual for the stock that you play. And if we look at the Exigam chart, we can see that Nasdaq is in a rising trend in the short-term picture. Right now it's at the very top of the trend, just above 13,000. Relative strength index is overbought. And if we look previous back, we can see that every time Nasdaq been overbought, it has had a correction down. Not necessarily a big one. The question is, what will happen now? The good thing is, of course, all the support below, and there is very strong support at 11,500. Normally you will have a fall somewhere, let's say to 11,800, where the market again will find a new bottom and continue upwards. There is nothing in this chart indicating a strong deep fall, let's say back to 10,000 as is. It should go slower. Little support, I would say, all the way down to 12,000, so that fall can happen a little faster. After that it should move somewhere more sideways and could fall in small steps further down or just turn upwards. Trying to conclude, we are at the top part of the trend. Most of the things in the chart look very good. The only thing that worries me is that everything is overbought, and this suggests a reaction down. Support at 12,800, later 12,600, 12,200 and 12,000. So I don't think it will be way too big. I think that we might see a week. The market goes a little up and down, but in general ends down. Exactly where? Hard to say. I have a feeling that we might see 12,400 by the end of the week. The question after that is, of course, what happened next, but it's a little bit too early to say. While being here, we can have a look at the 12-month charts, because this give a longer perspective, and here we see more what I argued in the previous part. Nasdaq is in a falling trend, and according to this it should continue within the falling trend. Very nice trend lines, very strong trend lines, I would say. And right now Nasdaq is at the top of it. It's overbought on the relative strength index also at 12 months, and it should fall down. Now, to see a major change for the longer term, what we like to see is Nasdaq falling down, then find a new bottom higher than the previous bottom, which was around 10,600 points. If that happens, we can have a trend break. But make no mistake, in the long term, Nasdaq is still negative. The short term is positive, but as I say, it's showing signs to move out, as we can see in this 12-month chart. Everything indicates that we should have a reaction back. And conclusion, I think it will be a weak week for Nasdaq. I think it will end red, not much. It will be maybe a volatile week to some degree, and ending, in my opinion, 12,400 points. That's it for this part. Became longer than I thought again, but we'll run quickly through some major stocks and Bitcoin, of course, and then you will have the trading tips. Usually I run through the following stocks: Apple, Microsoft, Tesla, and then I do Bitcoin and Dogecoin, and I give you a small evaluation on each of them. I'm planning to change this a little bit because I have many requests for single stocks, so I think that I will change the program to do more the stocks that you request. And you can request this either by commenting on the YouTube video, sending an email, or using our Discord, and I will try to pick up and see if there are some stocks which I also think is interesting to follow. But we will for the last time follow Apple, Microsoft and Tesla. And I argued, why do I follow these stocks? Well, they reflect the market to some very good degrees, and I give you a market analysis looking at the Exigam chart, Nasdaq chart. But looking at these major stocks also give a general idea if they conclude with the same thing. So let's, for a very last time, run through the stocks: Apple, Microsoft, Tesla, and then I will give you Bitcoin and Dogecoin. And looking at Apple, has a golden cross, not a star, but a cross, back in early July, from the relation between the two moving averages, indicating a strong upturn. And right now Apple is within a nice rising trend. Everything indicates that it would change, and that's so nice to see, because last time when I checked it was in a falling trend. It has broken up, it has managed to establish a rising trend. At the current level it's at the top of the trend. And for those who love technical analysis, you can see that the volume is not following the stock on the last upturn. It's slowly going down, indicating to me that there might be a short-term top also for Apple. Very good support below, all the way downwards. I think that for the week ahead of us, you can on a very, very bad day see Apple down to 150, but in general you will see something like Nasdaq itself falling a little up, falling a little more up. By the end of the week, my just guess is that you will see Apple somewhere around $161, $162. I think it will fall a little bit. How long the buy signals from the moving average will last remains to see. If the stocks start to fall down, you will have the opposite effect. And I think, just to say that you will see exactly this happen. You will see Nasdaq now starting to fall down, where we will establish a sell cross. It's referred to as a death cross, and but that might be a few weeks ahead. Until then, you just have to enjoy whatever ride there is. And let's do Microsoft also very quickly. See if we see the same picture there. And looking at the chart, we can see that hasn't the same strong trend like Apple. Is a little different. It broke up from a more sideways trend, so it's a trend shift. Getting up on the high relative strength index. Due to previous movements, we have decided that the relative strength index is overbought at 75. It's currently 74, so it's for sure getting very close to being overbought. I think that you can expect a fall here. The volume doesn't follow the stock much. There is not that much interest. It's just nobody wants to sell, and the buyers are able to push the stock a little upwards. I think you might see a sell pressure coming. At the same time, little to no resistance above. Microsoft may very well go to 300. No issue about that. Very little support below mean that it may also fall very fast. First real support 290, later 280, 275. And I would say the major support is between 255 and 270. So for a trader, I would say that's the level where you want to go in if it gets that low again. For a week as such, I think there will be a fall for Microsoft as well. I think that we will see Microsoft anywhere around 280 by the end of the week. And then is Tesla. And Tesla is very hard to predict because Tesla is a very volatile stock. So usually it's about finding that good trend. You heard me saying when I bought Tesla and when I commented on Tesla, I thought Tesla at least would take out the potential to even $870. It did more than that. It pushed up to $930. If you also paid attention, you know that I was in Tesla. I was expecting this. And how did that trade go? It went very well. Very high for Tesla during this week was 940 something. And with a stop loss, the stock was sold. The profit you will know very shortly. Is it time to get back into Tesla? Well, there is a fair chance that Tesla will go up. Comparing to Apple, Microsoft, I think there is a bigger chance that Tesla will go up during the week than these two stocks go up. Relative strength index is 63. It's high, but Tesla, when it's on the move, usually turns around these levels. Previously 36, 46, 56. So I will not be surprised if Tesla goes for a attempt a mini rally. Volume following the stock, not the best I've seen, but not the worst either. Little to no resistance above. It can very easily try that $1,000 move one more time. Speculations about the reverse split is also fueling the stock a little bit extra. Support just below today's level, later 850, 820 and 750. To give a qualified guess, I would just say that I think it's a higher chance that Tesla will do good this week than Apple and Microsoft. But sadly, I think that Tesla will go sideways by the end of the week and lower than today. The reason for this is I think that they will be hit by a general slow market where people are more anxious after 3 weeks of upturn. Is a quite natural reaction, and I think that Tesla will move sideways, finding the end of the week somewhere around 835. So that will be the target, 835 for Tesla. And before we move to the trading tips for the week, let's just have a quick look at Bitcoin and Dogecoin. And you know that I personally also got a little bit more back into Bitcoin because I thought it was a good level. This is more a repetition of last time. I think I said that if you see Bitcoin above 24,000, it can start to move much more faster to close the gap up to 28,000. There is really no resistance above. Huge support below is a very good combination. And in the chart, if you're watching this podcast on YouTube, you can see that there was a buy cross from the moving averages back in July. A little later we saw stock market turn first, then crypto turned, and it's still in effect indicating more upturn. Relative strength index is comfortable, I would say. It's not very high, it's not very low either, giving me the idea that we can continue to see an upturn in Bitcoin. Many people ask, will these things now go back to previous highs, 60,000, 65,000 for Bitcoin, etc.? Is there a chance? Yes, I think there is a huge chance for that to happen. It's so hard to say exactly when. It might be that the stock market now are at the bottom. It may be that we speak in a year and we see Nasdaq at 18,000 points. These things can happen because nobody exactly knows what's happened in the bigger picture. There is a likelihood of the things that I say, but there is also a likelihood that it goes the other way. Only later we can tell exactly when the bottom was. My feeling is that there is more downturn ahead of us, but nobody really knows. So how can we play these things? And is Bitcoin at the very low 20,000? Someone said it will go to 0, some to 10. The bottom will be 10. I thought it would be 30, later I thought it would be 20, and it turned around 20. Doesn't mean that this is the bottom, it may just fall even faster. So how do we play this? Well, we look at the support and the resistance and we try to find what is called risk reward. Right now, with very good support below, very little resistance above to 28,000, is a fair chance that Bitcoin will continue to push upwards. Is a bigger chance than that it should go down. For sure, it's a high likelihood of a sideways movement. When it gets to 30,000, there is so much resistance that it may not break it, it may fall down again. Some would choose to sell at this level, reduce their exposure, waiting to see if it's able to break 30,000, then get back in. There is many strategies you can do for it. When it gets to 30,000, I will personally reduce exposure a little bit because I bought some at 20 as well. So I will reduce maybe half of these shares, coins in Bitcoin, just to secure that profit, and it can do whatever it likes. There is many strategies around this. Finally, we will look at Dogecoin, represent these other smaller coins and tokens, and it's not really very funny other than when it moves very fast you can do some high speculations in that. I was in for many runs in Dogecoin, was doing very well. I did the run up to 20, I did a run from 20 to 40. I sold at 40, bought back at 20. Continued downwards, I bought more at 10, continued downwards, and I bought more at 6. And doing this averaging down, I have been able actually to start to get close to break even again. The previous profits still makes me very profitable in crypto, but on the last few trades has been wrong. As I said, I bought at 20, I bought at 10. And I still need a bigger upturn in Dogecoin to get back those two last investments. Will it happen? I don't know. It's just a small funny trade. These things can go very fast when they decide to. And finding that exact bottom is hard. Should you invest into Dogecoin? No, I don't know. I would say 7 cents looks like a nice place for me right now. If you're able to get in at 7 cents, you might do something. In any case, you should only invest with money you are able to lose, because there is no secure game for crypto market, but in general they look like they are for still a slight upturn. That was the analysis of the stock. As I said, this was the last time I will do it like this. Next time I will do it a bit different, trying to get a new vibe into it. If, and I know some of you are Apple traders because you have sent me some messages asking about my Apple guesses the weeks I've been away. Hopefully you learned a little bit about how I look at Apple from week to week, or Microsoft or Tesla, and just use that knowledge. I always try in these podcasts to teach you a little few things now and then. So you should have some basis if you're listening. If you're a totally new listener, let's say that you got into this podcast on a random and you now think, what is technical analysis? Well, just go to StockInvest.us, start to check it up, and slowly, bit by bit, learn technical analysis. And some of you say, why don't you use more of candlesticks? And Gulfing Star and long tail and all these. There are some I think 40, almost 50 different signals you can use in candlesticks. Some are proven very good. Dojo Star, for instance, Doji Star, Hangman, and all these. Some of them have turned out very good. Well, I can get back to that later. I use them, but not as often because that is much more related to day trading. And we are moving more and more towards real-time trading, and that's the idea as well. I will move this podcast more and more to more aggressive trading. That was the aim from the beginning. At the first period of time, I needed to let you into the bigger things, try to help you understand a little bit more, so you get a sense of this. Because too many of you do the same mistakes I did in the very beginning. I've been in this game since '96, and I've seen people come and go. I've seen fortunes come and go, and I've seen mistakes being repeated a million times. One of the biggest mistakes is just joining a train that's already running, and usually you join it too late. It's just getting to that next place where it stops before it goes back again. So you jump on a train that is already running too fast because you think there is more to gain, without checking what is the actual fundamental story behind the company, what is the technical indicator saying, where is the next resistance support level, etc. And you just get burned. You may gain some just to lose even more. Then you do the second biggest mistake. You double up. You invest even more in the train that's on the wrong direction. Trading tips. What are the trading tips per week? You will know right now. It's trading tips where money are made and money are lost. Last part. Very last part, few minutes, and it's done for this week. When I left you, I had 3 trades open. I had Zomedica, Tesla, and Chevron. I gave you the reasoning for Chevron being oil, and I thought Tesla would at least go to 870. Bought Tesla in week 29 for 705, with the idea that it should reach 870. Zomedica was bought all the way back in week 21, and I told you can just rewind the podcast back. You hear me saying that I'm not exactly sure. I think it will go to 30. It's just finding exactly when to buy it, and I think that it will go above 30. That's what I was hunting back then, some 20+%. And suddenly last week or the week before, Zomedica finally started to move a little bit. Has been trying a few times before. And the reason I chose Zomedica is because I've been trading a few times in Zomedica and I know the stock very well, and that gives me a trading benefit, and I've been very successful in Zomedica trading. Bought Zomedica at 0.2230, so 22 cents above in week 21. Good patience. I told you I will not have a trailing stop loss on it because it's very volatile, it moves very much, and I just believe that it will go. Now it's trading at 37 cents, up 67% since I bought it. And here is what I will do. I am very happy. I think Zomedica might go over 1. I'm very tempted to even increase my position in Zomedica, but I will stay restrained. As I told you, I think there is a fair chance there will be a red market that will just give a good buying opportunity. If I see Zomedica fall enough, I will even increase a little bit. But I will also do the same thing. I will put a trailing stop loss at I will put a stop loss at 30 cents for Zomedica, meaning that no matter what happens, I will do 20% plus profit. It will be more than 30% actually. So then it can just run its own course. I am super happy it's 66% right now, and you may ask, why don't you just take profit? Well, I tell you, this stock may go very high. I don't know how high or if it's at the top now. I just know that fundamentally the stock is interesting. Technically it's very interesting. I don't have time for day trading yet. I'm working to get to that place. I want to be in, that's why I cannot keep a tighter stop loss because it's very volatile, it moves very fast, so I'll keep it very wide as is, almost 20+% for the stop loss, and see what happens, and I will evaluate as it goes if I move up, but I think it might go further. Zomedica stays open. Tesla, what about Tesla? I bought Tesla 705 in week 29, saying to you that I think it might go to 870 plus because there were really no resistance up to this level. Tesla been moving very well, and with a trailing stop loss I enjoyed my holiday. Tesla went up to 940 and then started to fall and was cut by stop loss at 893, at a very wide stop loss, giving me 26.67% profit. What a nice profit in just a few weeks. Tesla is currently trading over 900 and it may very well go to 1000. It doesn't say that, but I am out of Tesla as is. Will I get back in? I will evaluate from week to week as I have done all the time. And for those following, you know that last time I traded Tesla was back in week 23. Bought at 642, sold at 739. That was 15%. Before that, we had that major run from 560 to 1200 a long time back ago. I might put all these things up for you at a later time so you can see all the trades by themselves, but it's just green, most of them. Last bad trade was Mara, week 29, which was down. The third stock that was kept on was Chevron, and I told you the reasoning why. Chevron was sold very hard. I never really got into exactly why. I didn't care that much because Chevron is making plenty of money. I got it at $139, currently trading at $159, up almost 15%. Stays in my portfolio with the stop loss. So Zomedica and Chevron is still open. Should you buy both of them? If you get Zomedica at a decent price. Very hard for me to say exactly what that means, but I have a feeling that if you can get Zomedica anywhere between 30-34 cents, it might be still a good buy. Higher risk, of course, not the same risk profile. When I was buying at 22, I thought the risk reward was extreme good. That was why I bought. Now it's not that good. Should you buy Chevron? Depends where you want to go. Chevron will pay a dividend, and more than that, I think oil stocks will hold good if markets go down. So it's a little bit about your trading profile. I'm not sure if it's the best price ratio to go in right now. I would prefer lower for entry points, so I'll not say that it's a good recommendations. But I have 3 candidates for you for the week, and they are, I feel both comfortable and not comfortable giving them simply because they are on the border of illiquid and they are on the border of high risk. So the total overall picture is not the best, but I found 3 candidates which I think might do just good. The first one, AGTI Inc. AGTI. I think there might be an upside in agility. It is little too low liquidity for, in my opinion, for my liking. But looking through a lot of stocks, the problem was I was checking many stocks trying to find some good candidates for you and for myself, because I will buy this stock when markets open, trying to find that low point. I will usually it's half an hour after stock markets open, the most usually case, anywhere between 30 and 45 minutes after opening. I'm usually in position, because that is in average the low. Sometimes it can take a few hours before I find that low, but I will try to get into AGT, AGTI. Then I will try Mercury General Corporation, MCY. I think also this may do good. The third is overbought, and I told you over and over again that buying overbought usually mean that you increase your risk quite drastically. At the same time, that's where stock can go very far. I gave you the reasoning for the war industry, all these things, that they will do good. So Lockheed Martin, LMT, Lockheed Martin will be the third trading tip. So these are the 3 trading tips for the week: AGT, AGTI, MCY, Mercury General Corporation, and LMT, Lockheed Martin. I will be on a tight stop loss for Lockheed Martin for sure, because I'm just out after that overbought run. I think that it might have a little run. For none of these stocks I expect very high return, but in my world 2% is very good. Hopefully one of them will do more than that. Remains to see. You will know in a week, because I will be back next week. Until then, have a very good week and hopefully a green week. Bye.